Well, the crisis in Egypt is sure to have an effect on global markets. The MSCI Emerging Markets Index is up about 20% for the past year, but is down year to date. Our next guest says that concerns over the unrest could be unsettling for the markets. And Wyman is head of European emerging markets at Nomura Securities International. She joins us now from her firm in London. Ms. Wyman, welcome to Bloomberg's Bottom Line. Thanks for joining us.
Thank you for having me.
Egypt's stock market was closed today. It dropped 16% just last week, and spreads on Egyptian bonds and credit default swaps have widened more than 200 basis points since those demonstrations and unrest began. How long is this downturn going to last?
We think that it could actually last for some more time to come. I think the fact that banks remain closed, as was mentioned earlier on your program, equity markets are still going to be closed tomorrow and will probably remain closed for some time. So it'll be difficult to see exactly how much further the market will drop from here. But we still see markets both in Egypt and in the wider region remaining unsettled on the back of this unrest.
Is the main source of uncertainty in global markets a possible increase in oil prices? And are the markets pricing in a fear of contagion of that situation in Egypt possibly spreading to other countries in the region?
Yes, I think that's right. The increase in oil prices has been sort of a result of two things. First, of course, as you mentioned, the potential or the risk that the Suez Canal could be closed. That doesn't carry that much of the world's oil supply, but it's still an important factor. You get about 1 million barrels per day through the Suez Canal. But the bigger risk factor for markets is the potential for sort of a wholesale reevaluation of political risk in the Middle East. And that means the possibility of contagion from Egypt to other countries. While we don't see regime change as imminent in any other countries at this point, markets are expressing a concern about that possibility.
And we did see Brent crude rising above $100 a barrel today for the first time since 2008.
Yes, that's absolutely right. I think that's something that we could continue to see in the coming days as markets try and understand what the risks are, for example, in places like Saudi Arabia, where we have seen very small protests. But I think there are some concerns in some of the larger oil producers as to whether this contagion could pass further along the line. For many of the oil producers, for example, UAE or Kuwait, we think the risk is still quite low, however.
And we were just talking about the Suez Canal and perhaps concerns that there could be a disruption of traffic through the 120-mile canal. The OPEC Secretary General Abdallah al-Badri said today OPEC would increase output if the unrest in Egypt disrupts supplies of crude from the Middle East. Would that be enough to ease the concerns of the global markets?
I think it could provide some relief, but the fact that markets haven't responded all that much to it today, I think still gives you an idea that the concerns about the uncertainty that lingers in the Middle East are still there. And the fact that we're unlikely to get a resolution to the political standoff in Egypt anytime soon, I think is going to continue to create that concern.
And there's also an insurance risk. I was talking to our bureau chief in Cairo, Mahmoud Qassem, about this. Shippers' insurance costs haven't risen, but what type of jump might we see if the Suez Canal is closed, if there are significant delays moving goods, or if traffic has to be diverted?
Yes, I think it's important to note at the outset that we don't put a very high probability on that at this stage. There is quite good security around the canal, and the Egyptian authorities in particular are quite keen to keep it open. Not only is it an important choke point for international trade, but it is also an important source of revenues for the Egyptian government. It brings in somewhere between $300 and $400 million a month. So there's a keenness to keep that open. However, there of course are risks around it, and you would expect insurance premiums to reflect that.
Right.
If and when there are greater risks to it.
Ms. Wyman, in our last minute, is there a risk of a run on Egypt's banks, and would authorities consider keeping the banks closed? Just Saturday, Egypt's central bank governor Farouk al-Aqda said that his bank had $36 billion in reserves, more than enough to accommodate investors if they want to withdraw any funds.
Yes, the reserves will be useful for people who want to withdraw foreign exchange. I think there's, of course, a risk once banks are reopened that there will be a drawdown in those reserves and there will be some desire to take money out of the country. As for the local deposit base, there's also concern there as well. The longer that banks stay closed, the greater the need is going to be for cash withdrawals as soon as they open. So hopefully the banks will be able to open towards the end of this week. I know that's what they're aiming for, but the longer they stay closed, the more of a risk of a cash crunch we'll see.
All right, Ann Wyman, Nomura Securities International, joining us live from London. Ms. Wyman, thanks so much. We appreciate it.